Our next featured company is Findi. So at this event last year, the company was trading at $1.23 after a parabolic rise just the day prior. Where is it trading now? Well, it closed yesterday at $5.80, and if you recall, that was a tough day on the market. And last year on this program, both of our guests called it a hold. So the news flow since then has continued for Findi, along with its share price appreciation. So for a view on where to from here, we spoke a short time ago with MPC Markets' Jonathan Tacadena and Findi Executive Chair Nicholas Smedley.
Yeah, thank you very much for having me here today. I'm actually in Delhi at the moment, finalising hopefully some further good news and further developments like the Central Bank of India contract extension of an additional 638 sites that we announced last month. And we have a number of further acquisitions that we're highly advanced on that we've told the market about. So exciting times for us at the moment.
So what are these further acquisitions, or how are they expected to generate revenue for you? I understand this specific extension for the supply contract with the Central Bank of India might generate you something like $6 million a year.
Yeah, that's just a relatively small contract for us. The acquisitions that we've been talking about in the market for some time now are us as the natural consolidator for the ATM segment here in India, as well as further expansion of our digital payment operations as well. So we're exploring acquisitions on both sides of our business, which are growing well.
Now, I want to bring in Jonathan Tacadena from MPC Markets. This is a stock that you like. Obviously, the market agrees as well. When you look at these acquisition opportunities, what does that tell you about future growth and why this stock is looking so attractive?
Okay, so I just want to step back a little bit here and actually just talk about India from a macro perspective. So I just had a quick look at some of the stats. So India's GDP growth is expected to grow 6.1% over the next 5 years. What that means is it's going to actually surpass Japan and Germany in the size of their economy. So we're talking about growth. So one of the easiest ways to find profit within the stock market is to find something that's growing. And so what we're doing here is we're kind of doing a country arbitrage, going into India where we're experiencing great growth and this great opportunity. So what we found in Findi is it was when I came across it probably about a year ago, it was kind of undervalued and the market's starting to catch on to the story, and that's why it's had a nice run. I mean, like when it first came across, it was around the 50-cent mark. I didn't get involved till about the $1, so I missed out that first surge, but it's kept powering ever since. And when we first started to talk about should we be part of the small caps exposure, Findi was trading around the $4.50 mark, and it's surged to $6 since then. So very popular amongst the market here. In terms of future growth, though, I'm sure Nicholas will probably do a better case than myself. But the way I see it is that there's a bit of a high chance of a re-rate here. So they're expecting to do an IPO late 26. So they're working towards that now. But the thing is, they're kind of just being valued at about 7.5 times EBITDA at this stage, whereas most of their peers in India are trading around the 14s and higher.
All right, well, let's get straight to Nicholas then for his thoughts, because no better person than the executive chairman to tell us about the future growth plan. So as you said, that you are in India at the moment. Jonathan mentioned the listing in India, 2 of your Indian subsidiary. Just tell us what you're speaking at the board level in terms of these further growth opportunities.
Yeah, the main thing for us is we are gearing this business for the listing in the second half of calendar year 2026. And we're doing everything we can to ensure that we deliver on the same historical growth trajectory that we have done from 2022 through to now, which has seen us go from approximately 40-odd million of revenue in 2023 through to a forecast revenue of 80 to 90 million of this year, and then EBITDA in 2023 of 16-odd million dollars through to forecast EBITDA of 30+ million EBITDA for this financial year. So all of that's been delivered on organic growth, and we see that continuing amongst new contract wins, a rollout of new white label ATMs under the white label ATM license we've recently been awarded from the Indian government. And then on top of that, we have both acquisitions in the ATM side of our business and the digital side of our business. So we see those as significant catalysts in the near term, as well as good organic growth in the medium and longer term as well.
What are the aspirations, though, to tap further into this very fast growing market, particularly with the rising middle class in India?
Yeah, so for us, that's really our Findi Pay digital merchant locations, where we have at the moment 38,000 stores across India as at August of this year. And we're growing at between 2,000 and 3,000 merchants additional per month. And we've told the market that we have an aspiration or a target of having 60,000 of those locations by 31 March 2025. So, and those stores are really there to tap in the underbanked and unbanked. So what do I mean when I say that? So of the 1.5 billion people in India, there's 350 million people that are above the age of 18. That's 25% of the adult population that is not in the banking sector at all. And part of our job and our opportunity is to educate them and help them with assisted e-commerce, digital funds transfer, cash transfer, as well as bill payments and mobile phone recharging at our Findi Pay locations. And then one step above that, there is what we call the underbanked, which is another 450 million people out of the Indian population that have a bank account but haven't used it in the last 6 months. So it's our job to help them up-spec their financial literacy and transact with us on our Findi Pay merchant stores.
What's the likelihood or the plans, I guess, to really try and push into those regional and rural areas too, and particularly, I guess, educate on digital payments?
Yeah, so for us, our focus is the 650,000 regional villages that sit outside the Tier 1 and Tier 2 cities, where about 2/3 of India's population actually sits. For both our ATM on a brown label and a white label perspective, we're looking to roll out our ATMs in those locations, and likewise looking to co-locate our white label ATMs with our Findi Pay merchants' high-performing store locations, but again, focusing on rural and semi-rural locations across India.
And how do you, I guess, kind of hedge as well, or what's the change with the interchange rate there?
Yeah, so that's a real opportunity for us. So at the moment, the interchange rate in India is 17 rupees per cash withdrawal, which is about 30 odd cents in Australian terms. There is a lot of market speculation at the moment, and there's a current RBI review on that interchange fee. 2 years ago, they increased it from 15 to 17 rupees that it currently is. And the market speculation at the moment, if you do some online Googling, is that interchange rate could increase from anywhere from 19 to 23 rupees per transaction. And for us as a business, on a full year basis, a 2 rupee increase of that interchange rate is worth about 10 million to our impact on a full year basis. So a significant upside opportunity for us when that will finally be announced.
Now, Jonathan, we mentioned how parabolic the shares have gone, and you mentioned when you got in and where you could have got in. For people watching, you wouldn't say it's too late to get in at these levels?
Oh no, so if this was an Australian-based company, yeah, 300 mil market cap tends to level off. For some reason, within the small cap space, once they get to about 100 to 300 million, you barely see companies keep powering on to $1 billion market cap here. Whereas as Nicholas just said, if he completes a few mergers, gets that increase there, and then the rollout based on the growth, they could easily get to $1 billion market cap. I mean, I wouldn't say easily, but I just think that it's how can I say, that parabolic move can continue from here.
So it could move very quickly from a small cap to a much larger player.
Yeah, absolutely. And the thing is, they're already planning to have that listing in India in calendar 26. So that's about a year and a half away. So if they execute over the next couple of years, obviously they want to list at the highest value that they can.
Now, as somebody who's invested in this stock and looks very closely, is there a question you'd like to ask Nicholas while we have him?
Okay. So I've as a trader myself, I find it interesting that the Indian options market trading volume has gone nuts over there. So one of the stats that like just staggered me is that the notional daily options volume is actually higher than the NYSE. So their option depth in the US is a lot bigger. But I guess the question that I got to ask for Nicholas is how, I mean, like, let's just say, Findi Pay goes on through. Is there any ambition to, tap into that market? Because obviously their financial services sector is just booming with those types of things. So there's just plenty of opportunity there if you want to go into maybe in wealth management down the road.
Yeah. So that is what we're literally wanting to do on our products and services. We won't be looking to directly go into wealth management ourselves. We'll be looking to partner with strategic organisations in India to be able to provide those services through our FindiPay networks and give ourselves a good differentiator compared to other operators in the market. And that's not just in funds management, that's also in insurance and other high margin products compared to our existing suite of 7 products. But one step further than that you spoke on as well in terms of options volumes is also the re-rate potential for this 2026 IPO. One of the main reasons that we are looking at doing that is the multiple arbitrage. So as you mentioned earlier, we're trading about 7.5 times EBITDA on the Australian market. Our listed peers at the low end for a pure cash play is trading at 14 times forecast, but our digital peers that are alike for our FindiPay side of our business, and that's why that is such a critical growth driver for us, are trading at more than 40 times EBITDA multiples. So that's why we see a real windfall and arbitrage opportunity for our existing Australian shareholders when we can deliver on that listing on the Mumbai or National Stock Exchange in India.
And just getting back to some of these further growth opportunities as well, Nicholas, just tell us on a macro level how your business is faring. You've obviously done very well, but does that include expansion in terms of staffing levels and getting to a bigger global player?
Yeah, so we have increased staffing levels moderately over the last 2 years. We currently sit around approximately 700 staff across Delhi and Pune, and we've got 10 satellite offices across India. And we are operating now in every state and territory across India. So we're the only pan-India operator for ATMs and financial services that we're aware of at the moment. And with these future growth opportunities, both organic and inorganic, we would see that team to probably grow in the order of 1,000 to 1,100 over the next 2 years. So modest growth, really being able to capitalise on our systems and processes to provide scale and help drive margin accretion.